Here we go. We have a live video in progress with the new trial member that came to SMF. And upon arrival here, he had an Apple position open. Okay? And when he came here, he had a lot of times in the past, he'll be happy to tell you in his own words what he would do when it went that way, or what he would do when it went that way, or that way, and through the time frames of owning it compared to what he did here and what the trade management. And his name is Ken. Are you available, sir?
Yep, I'm okay.
Okay, so I'm going to ask you a question. In your SMF free trial, you owned a position. It was on Apple. And why don't you tell me what positions they were?
I have 300 shares and 10 contracts, 10 call contracts of 2013 at 310, and I have 4 contracts at 2012 at 355.
Okay.
And to me, like for my last 5 days trial, it's really an eyes-opening experience. When I first start, I don't even know what's a IR, what's a DS, and I don't know anything of it. I just follow exactly your instruction, and I couldn't believe myself that I can make the market. So I sold, at least I remember I sold 100 shares at $422 something.
That's and right. So you sold at the high.
At the very top, I'm so amazed that I can do it myself.
Right.
And prior to that, I also sold 2012 355 contract. Right. And I sold part of my 2013 310 call contract, one at a time, to just leading the market. This is great feeling. Right. And doing that, follow your instruction, I pocket over 70K into my.
So your weekly profit was $70,000 by selling into the move instead of holding the entire move all the way back to support levels.
Yeah, I sort of put 70K into my account, and then on maybe by mistake or not, but I know you say something about the 400, 410, and so I get 2 20 contract of the put at the very high.
Right up here, you were buying the 420 put and the 410 put up here.
Yeah,
when we were making the high and reversing intraday, you heard me paying for the 420 and the 410 put, and you bought 10 contracts on each one. So when we dropped down the next day to that low, that first pass, you were cashing in, right?
Yeah, that morning I cash in. I make 30K, and I don't believe that I can make it that fast. Right. Because my past experience, I always riding it roller coaster, going up and down is sort of really burn my nerves.
Well, what you're saying is that when they're up here at the high and you don't sell, you just let it come down to the low and you stay in it, and you're not making the short transaction and making 30K here like you would here.
No,
and
not at all.
Going long at times and making a market. So by you banking this 30K, by buying the put side up here when we were going into the daily double top in your free 5-day trial at SMF, you were getting that 420 put and that 410, and those were very extreme wholesale value deflated put prices, were they not?
Exactly.
Okay, so that is where you got the yield on that next daily gap down reversal. Look at the gap down reversal, and you were selling in here. And when you were selling, but on the way up, you were unloading those contracts, didn't sell them all, but you were selling into the highs of the move, and you still own a piece of your long position, but you could never lose value because you made 30,000 on this side of the market, right, Ken?
Yeah, that's true. Exactly true.
And you still have a net long position of your original position that you were selling into, and that is what we call being a market maker and adjusting oneself so that those positive debits, you're talking about $100,000 in profits that Ken made.
Right.
And he's become a member here, haven't you?
Yeah. So during that 5 days, I do make 2 mistakes.
Sure.
The first one is when I'm selling it at 422, when it comes back down, I feel happy, so I jump back in, and then I was so no, I'm wrong, so I get rid of that. So I make that correction right away. That's the number one mistake. The number two mistake, to me, is good, but to your group, is not that good.
No.
Because you said that it's only allowed to do one contract at a time. I didn't realize it, so I just get 10 contract of 420, another 10 contract of 410.
That's
so
right. Well, that's okay. You scale in. What they do is they scale in to make a market. They'll use a one contract to make that market. Once they can see how the public is going to react, then they go in and start buying their heavier volume ones on the second transaction.
Oh, I see.
Okay.
So I just jump in and get 20 contract, and I wake up, and then it said, "Oh, sell them at the start opening."
Yep.
So I get 30K right away. I said, "Oh, just overnight."
That's exactly right. But the thing about it is, on that opening bell, if you wouldn't have sold up at the high, they dropped $10,000 in value, each one of them, didn't they?
Right.
So
yeah.
you would have never had the 30,000. You would have held them, and you would have said, "Oh, well, now I'm up 5 or 7,000 on the whole thing," instead of cashing it up there on the 30.
Exactly.
And cashing in that inflated movement down, that left elbow daily gap down, inflated that contract to sell. That's why you got the profit. The other thing is, you're a market maker. When you come down here, you can buy these calls that also expire on a weekly level and take them to the upside and sell in and get on the put side again on a short macro time frame, versus using the leaps that you were using a 2012 and a 2013. And those are, at the time, anything over 9 months is considered a leap. Long-term option. It's just a long-term hold, 9 months. So you've learned that buying in an investment is to sell, and it's okay to sell and take money, and buying the same investment again at certain market levels is also going to be okay. Is that true?
Yep. Yes, an awesome experience, really.
All right. And what were the reasons? So when in your past, what was the most common thing you would do when it came to engaging with equities?
Yeah, in the past, when it's going up, I'm not sure it reached the top or not, so I'm just keep waiting, and then once when it reaches the top and coming back, I say, "Oh, my profit's getting less," so I'm holding it and holding it. This is the kind of public emotion type of thing, psychology that I run into.
Right.
And I'm trying hard to correct that. Hopefully that I can get it. I can float all of them out.
And you will.
Training.
And you will. And you've learned that being an SMF MMT market participant for 5 days at no charge to you, you were able to find out by going through it that the truth was there, and it wasn't some pipe dream that you were being sold or promised or anything, were you?
Yeah, I make my tuition fees already.
There you go. And you have. And once again, Apple Computer was a great position, and Ken happened to own it before he came here. And then by disclosing it, he still owns some of it. But he sure was able to take his dollar cost capital risk down to levels when he was adding that other side of this trade, when he was adding that additional $30,000 in revenue. That has dropped his overall, what he owns, what he has left of Apple, the contracts that he has left, and he still has a couple hundred shares of it left.
Yep, I have contracts now and also cash.
And cash.
Yep.
And the thing about it is that your dollar, what you have left in ownership, has gone way down in value, because the $30,000 debit here, when you subtract that against your value, you've taken your dollar cost risk exposure to much lower levels by having the right.
Yeah, I'm almost zero cost now. Is that my cost for the Apple?
That's right. So if you're almost at zero cost, that means your dollar, by doing this side of the trade, Ken, and by managing it correctly and listening correctly in your free 5-day trial, you have got your risk. You own some of it, but principal risk is not there. It's almost free.
Right. Yeah. That's all. Yep.
And in your starting tomorrow morning on Monday, which will be 9/26 of 2011, today's date 9/25/2011, is that profit is there that will be managed at the current level. And
Right.
what Apple is going to do. Does he have to sell into some more? Does he have to come back over and buy some short-term calls that expire in October contract that from the wholesale entry, and we want to pop back up here? We want to consolidate above the half diamond price action bar. What does the next trade management look like in the shorter term to keep that capital cost revenue structure in play, along with applying the correct and only market maker buy and sell tape, that's the public, and how do I get weighted in there, and understanding how to take profits and adjust my thinking and my trade management, right, Ken?
Yeah, you're right. I'll try my best to be a market maker.
That's right, and that's the way it is. And congratulations, and he will be joining the free 5-day trial. But it's important that this live video is made because he did that last week with all the MMDs, and nobody can deny that. And that was a major change.
Sure,
And
it
it's
is.
where the smallest changes that sometimes we don't know why they're being made, but it's the result of those smaller changes that reinforce the new way of doing business between a buyer and a seller, a buy side market, weighted market, and a sell side weighted market. And that's the gift. Well, thank you very much, Ken. I do have any questions. That's what Ken did, Mike, and you're a new trial participant. And if you'd like to ask Ken a question right now, you're welcome to.
Ken, were you were live on your own account during this
Yeah.
program?
Yeah.
Okay, so it wasn't paper money. It was just you took the
No,
risk
no
on
paper
and you
money.
went right at it.
Yeah, no paper money. I actually, as from my thing was swim trading account.
Ah, okay. TD
Yeah.
Waterhouse,
Yeah,
Ameritrade.
yeah, Ameritrade. Yeah,
Which is a public model,
Right.
which he won't be on anymore.
I know.
He doesn't.
I know.
This is okay. So yeah, when he prior to coming, he owned it. He had bought it, and he didn't know exactly what to quite do with it because he had been in it for a long time, and he had watched the value go from $90 a contract up to 117 and not selling it, came right back to $90 in value, and he hadn't made those kinds of things during the roller coaster time period of ownership. Ken had never taken profits like this and scaled out into strength and gotten on the other side of the trade. He was always watching what would happen instead of doing.
Never before. Yeah, this is
Right.
my first experience, an excellent experience.
Right.
Congratulations, Ken.
Thank
And-
you, Michael. Yeah.
I'm going to conclude the video on the Apple trade, but one thing as I conclude it, the first right, this is volatility pullback. This was going on in the NASDAQ 100 and the NASDAQ comp during volatility period. But look at the diamonds were higher than the previous diamond low. The diamond popped, holding that half bar. The diamond popped, coming back because each high they were selling into moves. But then again, that each daily low was getting stronger and stronger on each pullback. Every one of them had a pullback to these half bars in here. But then they continued, and he was here during the breakout. He was in this particular breakout right here. Actually, he was in it when it started. It was right about here at 395 on the low. This is where he was involved in that. And that was quite a daily expansion because you got to remember that each one of these teeny lines are $6.56. Each one of these lines. And they're right to the penny. And he got that move right up to that top and bought them put options because we were buying them to get on the other side of our breakout.
Yeah, the
In
triple
case-
H. Yeah.
Yeah, and during the triple witch. So we had a triple witch, a quadruple witch expiring that's what drove that 5 days higher in Apple. But then when we got into the new 5-day period, then we started getting gap downs from these highs here. And by getting on the side of the market up here before this event happened here, Michael, is where he was cashing in on the opening bell. True or false, Ken?
True. Yeah. Sorry, I mute myself.
Right, and so he was getting in here before that event happened.
Right, exactly.
And knowing when and why and where and what the weighted price was between the buyer and the seller. I'll conclude the new introductory of MMT, Ken, and that forward looking through his time, that this live video, what he went through, and he did this. I didn't do that. He did it. He did it with guidance, but he did it. And the thing about it is, as long as it stays this way, well, prosperity is in both sides. To the upside, to the downside. Prosperity comes with proper risk management, entries and exits, understanding bull and bear, understanding ETF bull and bear, understanding the quality of the company, making a market intraday on a 5-day compounded level times 240 days, which equals a compounded yearly level within the price action, and you can make a very comfortable living trading Apple Computer.